What's up? Welcome to the stream. I'm Bren. This is Trades of Glory, baby. All right, it is Friday. So we're gonna take a look at the charts and see what we see. Now this is yesterday. As you can see, very successful day. Bought here, added here, bought here. So this is a channel pattern. So this is how you make money day trading channels. 80% of the time the market's in a trading range. Trading range is a channel. So it's a trending trading range. So that means this pattern I'm about to explain, you can use 8 out of 10 times on average, okay? So check the pattern. This is the open of the day. We went up and then we went down. Then notice I bought here, okay? And then every time this happens, right? Every time we get a move down like that, I'm going to add on. Not every time, but at least 2 times. So check this out. The green boxes are where I added on, okay? So here's the pattern. It's like this, down, and then up. Down, and then up. Down, and then up, okay? So that's how it works. And if you see the green box, right, that makes it a little bit clearer. Check this out. We're gonna hide all, okay? Now if you just were to see this, you can see we went up and then we went down, add here, another push up, wait for it to come down, wait for it to reverse. You see the tails on the bottom of the bars? That means that there's buyers down here because the price got pushed down, and as soon as the price got pushed down, all these buyers came in and said, that's a deal, that's a deal. And so that's what this is called a double bottom. If you see 1, 2, 3, 4 times, right, that means, and then you see a bull bar closing on or near tide, you can add on there because that's a bullish sign, right? If we add the indicator, check it out. Let's hide the drawings and just show the indicator, okay? And let me hide the executions so it's a little easier to see, okay? And then we'll also hide the bar counter because that's a little bit easier to see too. Okay, so check out every time that we got close to the moving average. The blue line is the average price. Think about this on a very simple level, okay? Markets are designed to facilitate trades, right? The blue line tells you basically what's going on, okay? Because it's the average price. So if there's more bars above the blue line, that means we're bullish. If there's more bars below the blue line, that means we're bearish, okay? Do you see how there's so many bars above the blue line? That means it's clearly bullish, okay? But check it out. Look what happens when we get close to the blue line. Sorry, I gotta take a minute to get my dance on. This is the channel with the best music. This is the trading channel with the best music. Mark my words, baby. Okay, so as soon as we got close to the average price, the bulls bought, okay? What does that tell you? Think about this. Forget the chart. Forget the chart. Think about this, okay? Look at me. Look at me. Can I do full screen? Okay, check it out. So if the EMA, the exponential moving average, okay, that's this guy, this line, okay? If the exponential moving average shows you that every time we get close to it, the bulls are buying, okay? So there's more buyers than sellers, then that tells you that think about this in a basic level, on a super basic level. It just tells you that people think that the price is going up. People only buy in the financial markets because they think the price is going up, right? If they think the price is going down in the future, they're gonna be selling and there'll be more sellers than buyers, okay? So when you see here, if I put the indicator back on the chart and I hide the drawings, you can see that the bulls didn't even let the market touch the moving average, okay? We got very close, and then as soon as we got within a couple ticks, 2 ticks about, the bulls bought immediately, okay? So this is strongly bullish. So in theory, and looking back, hindsight is always 2020. People always come in on my videos saying like hindsight is always 2020. They call me Captain Hindsight. I'm like, yeah, let me wear my cape, baby. Just call me Captain Hindsight. And it's true. I always say to these people in the comments, it's a fair point, right? It's always obvious looking back, right? But that doesn't mean you don't look back and try and learn. If you're a trader, you got to be learning all day, every day. Even the best traders in the world, my mentor, 35 years in the game, he's still learning every single day, still does his chart markups, okay? So what are you going to do when the trading session's over? Sit on your ass? Right? You got to learn from the past, learn from the day prior. That's what we're doing now. Now that we've done that, let's have a look at today and see what's going on. So before we move on from yesterday, I want to say though, if you look at the bars and the drawings and the lines, it can be very fucking confusing, okay? It can be very fucking confusing. So what I recommend and what helps me just not get too confused, right? One of the hardest challenges in trading is not overthinking it. If you had Albert Einstein and Forrest Gump, Albert Einstein, Forrest Gump, who do you think would make more money as a trader? Wouldn't be Einstein. Because overthinking it in the moment, the market is moving too fast and there's too much going on. Forrest Gump would just have some simple setup and he'd just be trading it. So you can't overthink it, is my point, all right? So if you ever get confused, just, hide all of your indicators. Just hit hide all in TradingView. And if you want to use TradingView, you get a discount with my link in the description. I love TradingView. I think it's the best platform. I've tested a lot of different ones over the past years. But if you ever get confused, just look and say, okay, what can I see happening, right? What makes sense? What's a story or a narrative that makes sense, right? If you look at the average price, put an exponential moving average on your chart or whatever moving average you want, and just ask yourself, if the buyers keep coming in and they're buying at the average price, or they're buying above the average price, and then they keep buying higher and higher and higher, what does that tell you? It tells you the market's going up. It tells you that we're bullish, okay? So that's really an easy way to keep it simple. We talked about this on the stream yesterday. Keep it simple. That's the name of the game with trading. You got to keep it simple, and oftentimes the more simple that you can keep it, the better you're going to do. Okay, now let's talk about today. It's 7:30 Pacific, and as you can see, we're going sideways and then we're moving down. Now, check this out. This looks a lot like what I was pointing out to you before. You know what? Let's get rid of all this shit. Okay. This looks a lot like this. Remember I was pointing this out to you? Okay? You've got a double bottom. It's a bottom, okay? It's two double bottoms, right? 1, 2, 3, 4. But if you go to a higher time frame, it's just a double bottom. Okay, 15-minute chart. 15-minute chart, 5-minute chart. Okay? 5-minute chart, 15-minute chart. Okay? Same pattern, right? Micro, macro. Okay? Micro, macro. All right? You get what I'm saying? So, oh, that's another tip as well. If you get confused, and I was doing this yesterday to help keep myself under, in sync with what the market was doing so I didn't confuse myself. You can switch to a 15-minute, switch to a higher time frame, and it's a lot easier to see. Doesn't that look more obviously bullish? It does, right? So, nice little hack. Okay, now, look what's going on here. First thing we want to do is mark the high of yesterday, okay? Action number 1, when you get in, mark the high of the day, or the high of yesterday, okay? We can mark the low of yesterday, but I don't think the price is going to get all the way down there because we just broke all-time highs. This is the daily chart. This is the daily chart, okay? And this is the all-time high. Here, okay? See? I marked it, okay? From January 7th. 21. 20. January 22. Yeah. Yeah, that's right. Okay. All right. So this guy, we've got a strong breakout. Okay. We closed 64 points above the all-time high. That's a very strong breakout. And then look what's happening now. Bulls are buying at the moving average. Remember what we were just talking about. See here? Look what happens. As soon as we touch the moving average, the bulls are buying. Now, one of the mantras we were saying yesterday is anything goes until the bar closes. Okay? So this is a mantra. Now, does it look bullish? Yes. Are we bullish on higher time frames? Yes. This is a daily chart, okay? I'm expecting more buying. It looks like we're gonna have more buying, but look, this is a daily chart. There's six and a half hours left in the day. So anything goes until the bar closed. This is on a 5-minute chart. Anything goes until the bar closed. This is a daily chart. So, we don't know what's gonna happen here. We could reverse down. Anything could happen. Anything could happen at any moment. You have to always remember that. No one's smarter than the market. You're not smarter than the market. I'm not smarter than the market. Don't think that you're smarter than the market. That's a really good way to lose money. I've made that mistake before, I promise you that. Okay, so the best the bulls could do was a doji. Not good but we are at support, okay? And we're here at the hive yesterday. So let's see what happens. Let's add some more detail here. $18-point gap up. What does that even mean? It means that the market opened 18 points higher than it closed. This is the close of yesterday. It's the open of today. 18 points above. So the first two things we do when we enter, when we start the session, is we look at where the price closed and where we opened. Okay, if there's a gap, note it. Note if it's a gap up or a gap down and how much. 18 points is not a big gap. It's not a small gap, but it's not a big gap, right? Yesterday was a big gap. Look at that, okay. 60-point gap, that's big. 18-point gap, not so much. What else? Then we marked the high of yesterday. We could mark the low of yesterday as well. That's another thing that I like to do, but do I think we're gonna get down there? No. Okay. So maybe we get long here, maybe. It's just a very, very weak signal. We might have to go lower. Looks like we're gonna have to go lower. But maybe the bulls start buying, we'll see. Irrelevant, period. We're moving on, period. If it happens again, let me know and we can talk through it. But right now we're looking forward only. Okay, where we at? 2 consecutive bull bars. That's a good setup. Be willing to get long. This is a trading range. We just bought in the middle of a trading range. It's not the best setup. Two consecutive bull bars. Coming back down to test the moving average again. So that shows you we've got a bear channel. If I get subbed out, I'm going to allow it. I've learned that trying to avoid losses is a mistake, because if I'm wrong, right, then it's actually good to take the loss, so that I can reevaluate. But one possibility is I'm wrong. This bear channel continues to move down, right? Oops. So here's one possibility, right? We do that. Another possibility is double bottom. Looks like we're moving down to me. Let's see. What I will not do is move my stop loss. Such an amateur move to widen your stop loss. All right. So we've got a bear channel, right? You see the red line? It means we're moving down. Bears are selling right here. Bear breakout. Now look, do you get short there? Maybe. Here's the tricky thing about bear channels. Bear channels are bull flags. So I'd actually be more excited about buying here than selling. But to be honest, I think I'm gonna wait and kind of see how things shake out. Here you've got the moving average acting as support. You've got a bounce off the moving average, and then you've got consecutive bull bars. The second one, bigger than the first one, closing near its high. Bullish signal. Here, looking for a move up, right? Or maybe more accurate, like that. Looking for that, okay? That did not happen. Instead, we gotta move down. So, what's gonna happen now? Let's see. We've got a support zone here. I'm sure you probably heard that once you crack resistance turns into support. So there are buyers down here possibly, especially because we're, you know, a couple points below the moving average. But keep in mind, yesterday I was saying this, we are now 120 points above the average price on the daily chart. So yes, it was a very strong breakout above the all-time high yesterday. Kind of exciting, honestly, if you're an investor, right? Which I am. But also, we're overbought, okay? Right, like this is a trend that's lasted a long time. This is October, okay? So from October to February. Count the days, people. That's 116 days. We've been trending up. It's a long trend. All trends come to an end. Does it look like the trend is ending? No. So that's why I'm more eager to buy, but also I'm hesitant, especially after not getting this push up here. Bears trying to push lower. Looks like they'll get the move, but I just don't expect it to go very far. Although, you know, this is a bear breakout. Why? Because we closed below all the bars to the left. But if the bears are confident, the bears are confident, right? If you're confident that the market's going lower, why aren't the bears selling? I mean, anything goes until the bar close. So we gotta wait a minute and 18, but I like to mark 8 or 805. It's usually a reversal around here. So I'm thinking maybe we try and push lower. The bulls get a double bottom again. Because we have one push down, then we had another push down. Now we have a third push down. So technically we've got a wedge. Okay. But as you can see, it's also a bear channel. And yes, bear channels are bull flags. So this could be a pullback on a higher time frame, right? Think about it. Pullback and then up. But we just need more data. We need more data. We can't say. I love this beat so much. Okay, so the bulls got a second, or the bears got a second bear bar, but doji testing the bottom of this channel. Bulls buying immediately. Now we've got two closes below the moving average. I'm tempted to buy because it's the bottom of this channel, but I will not. $15-minute time frame. Okay, so now we've got two strong bear bars, right? That's what that looks like on the 15-minute time frame. But let's see what happens. Let's get some good beats going, y'all. How do you make that go away? Ooh, I kind of like this one. Ophelia and Western. Great track, huh? Proud of that. Proud of that. what does it tell you? That the bulls are not selling into the close. It tells you that the bulls lack conviction, right? So you saw buying here, the bottom of this channel. Buying here at the bottom of this channel. Let's measure it. About 4 points, right? Look at the bottom left, ATR's 4.9. Okay, so if the bulls buy into the close, that means they have conviction, right? That's what this tells you. Always look at the close. Remember, on every candle, you got a candle, right? You got a tail. Oops. You got a okay, here's a candle. Here's the tail. Okay? And you got the high, low, open, close. Those are all the things to analyze on a candle. High. Low. Close. Okay. All different prices. All support and resistance, actually. Okay? So, look at this candle. The bulls actually flipped it bearish, right? The bears flipped it bearish, right? Notice that candle was, there was buying, and then what happened in the end? It actually closed bearish, okay? So that shows you that the bulls lacked conviction. The bulls were wanting to move up, right? The bulls were hopeful the market would do this, but it did not. So then they exited their position, scalping out, right? So the close of the candle, close is right there, okay? That tells you that the market is not bullish, right? That's what that tells you. And now we're getting a breakout to the downside. Now, I thought this was a decent sell signal, especially because we're so overbought. But to me, it looks like we're testing the high of yesterday, and I'm expecting a bounce here. So let's see what happens. See if we get the bounce here. A lot of trading is waiting. If you don't like waiting, don't trade. If you don't like waiting, don't trade. Maybe we go down here. Possibility. Failed breakout below the channel. A minute 41 on the candle. It's kind of hot. I like that. That's the one you want, yeah. Oh, that's hot. That's hot. That's hot. Okay, so again, right? Bulls bought, and then they're just scalping out. Obviously, bulls bought here, but if the bulls had confidence, the market was going up, they would have been holding, adding. So let's see how this shakes out. This is a rejection of the bulls, right? There were more sellers here than buyers. So this is showing resistance here, which gives you reason to sell. Remember, I said this was a possibility. Hive yesterday. Yesterday we on the stream we talked about support and resistance, the most important concept in all of trading. If you want to understand day trading, understand support and resistance. It's really all you need. And what does that mean? Does it mean that as soon as the price cracks support line, in this case this was a support line, right? Now we just cracked it. Does that mean that like automatically you just assume something is going to happen, like we're just going to go lower and that support turns into resistance? No, you can't assume that. What you have to do is you have to think of this as an area, okay? This is an area where there's an important price. This is an area, okay? An important area, key level, so to speak. And I wouldn't even call it a key level. Some people call it a key level. I'd say it's a key area, okay? And what do? You mark the key area. One of the easiest ones is the high of yesterday. Just always mark that. High of yesterday, low of yesterday. So you know that this is a key area. That's why we have it marked out in purple. And then what do? You watch how the price reacts. Okay? So first thing that happened is there were buyers down here. And so the bulls tried to buy. But then the bears rejected. Okay? And there were more sellers than buyers. And now we're getting more selling. There's 2 minutes and 35 seconds left on this candle. So this could be a sell climax, which means the end of this bear trend down. However, we need more information and we have to wait. Anything goes until the bar closed. Remember that, guys. Remember. Let's find some more beats. Nasty. Give me some hip hop. Get hip hop soul, I like that. I already like it. Okay, remember I marked out this area. We could definitely see it. Looks like we're getting it. Yeah. Okay. That's why I like these measure moves, guys. To the tick. Here we go. Now, this is a strong bear breakout, right? So will there be more selling? Well, we don't know because now we're entering another area of support. So we got another one of these. We got another one of these. So we gotta watch and see what happens. Maybe that's the end of the bear trend. That's a climax. Beginner looks at that and thinks, oh, bear breakout. Automatically we're going lower. We might. But also, the beginning of a trend looks identical to the end of a trend. Think about that. All climaxes are breakouts. All breakouts are climaxes. Climax is the end of a trend. It's a big push that ends the trend, like a climax. Get it? Okay? Example. Look at that. Look at that. Big push up. That started the trend. Right? Okay. Notice. Big bar, closing on its high. No tail. Same thing. Big bar, closing on its low. No tail. But then you can see that there's buying here so far. We've got 3 minutes and 47 seconds on the candle. Anything goes until the bar closes. But I think this is a reasonable buy. However, I don't like being the first one to buy. And buying against this, not the best idea. But you gotta weigh the probabilities, right? Look to the left. As I said, bear channels are bull flags. A flag is like a pause in a trend, okay? So this could be a up and then a pullback, and then we get more up, right? But we'll see. I do not know. Wait and watch. That's a strong leg. So another possibility is we get another move down, just like the last one, right? Down to here. That's a possibility. So it's hot, right? Yeah, that's a cool track. Does that look like strong buying to you? 40 seconds left. Let's see if we get something different in the next 30 seconds. We're gonna evaluate this close. Now notice, we're right on this line, which I drew, which is the 805. So usually the market tries to reverse right around here. This is 8 o'clock Pacific. Between 8, 805, something like that. Yeah, Lisa D. Lisa D, welcome to the stream. I think it's you. Go into your settings and increase the resolution on your stream. I'll double check on my end. But Lisa, welcome to the stream. Thanks for joining us. Let us know where you're streaming in from. I'm streaming in from San Diego, baby. Okay, so let's look at what's happening here. So we have a potential double bottom here, right? But there's no buying yet, really. The bulls were trying, but they couldn't even get it close. So now all the best of bulls got sideways. So think of it this way. If I'm a bear and I'm holding short, and then I see the bulls try and reverse right around here, and that's the best the bulls can do, I'm probably not too worried, right? Although we have to take into consideration what we've been saying. This is a daily chart. Lisa, we're trading the ES, S&P 500 futures. Lisa, I just checked on my end. Lisa from Wisconsin, thanks for joining the stream. I just checked on my end and everything looks good. So it's your settings. Now maybe we go sideways for a little bit and then we push up. That's a possibility. But if I'm looking to buy, which I am, right, I want to buy, I got to see more conviction from the bulls than this. This is nothing. This is a little doji candle. Look at the bar body. Nothing. If I'm looking to buy, I need a signal to buy, and there's no buy signal. The bears are in control right now. That's what we can see. The bulls tried to reverse around bar 20. Didn't get shit. If that bar was bullish for most of the bar, and then towards the end, you know, we didn't even get a bar body it, right? That means that the bulls tried and then they exited, right? They panicked out. They were like, nope. They had conviction and they lost conviction. And if the bears are in control and then the bulls try and fail, then that means the probabilities, it goes to the bears right now. So the probability is more down. So here's an example where it makes sense to be it makes sense to be cautious to sell, because that's the daily chart, right? But also, as I've been saying, you got to look at the average price and say, like, okay, we're already 100 and you know, over 100 points above the average price. So it makes sense that the market would have to pull back. Now, last thing I said about this area was that we want to see what happens when the price gets into this area. Support and resistance, the two most important concepts in all of day trading. It's not as simple as does it crack support or resistance and then automatically that means something happens. It's not that simple. The answer is it's more about a support area, right? They say key level. This is a key area. I would call it a key area. Key area. Key support area. Okay. Why? Well, because look, we reversed up here, then we got down here, and then we reversed up. So we're gonna see how the price reacts. So you mark the key area, okay, this key support area, and then you wait and see what happens and how the price reacts to that area. Right now, looks like we're selling through that area. So this key support area may turn into resistance. That's a possibility. Another possibility is that the bulls say, hey, we've had enough. We're ready to start buying again. And we get one of these, but here, and a move up. So, looks like a penis. Whatever. Lisa from Wisconsin, what do you trade? Are you new? Are you experienced? Are you intermediate? And also, how'd you find out about the channel? How'd you get here today? Let us know in the chat. That's what we want to see. Two minutes, 56 seconds. We're gonna wait for the close, see what happens. Bathroom break. Wow, okay, that's what I want to see. Cool track. I like it. Remember I said here we could get one of these, right? So we're watching what happens when we come into this key support area. How does the price react? That's what we're trying to see. 32 seconds left on this candle. Now, if I'm looking to buy, I want this to close above something. I want it to close above here, or here. Ideally, you know, a few things. I want a strong buy signal. A strong buy signal shows me that the bulls have conviction. You want this close to be as close to the high of the candle as possible, right? Now look, we didn't really close above anything. So I don't like that. We did close past the midpoint, so that's good. But that is a weak buy signal. This looks like a trading range to me with the bullish bias because of the context. Okay, so Lisa's a super newbie. Lisa says she's super newbie. She just started learning last week. Following the grain market, we have crops, which has been horrible, and want to be better informed on how to understand trading. Okay, cool. Well, Lisa, ask me your biggest questions, and I'll share anything I can and share with you. What's something you're working on right now? What's something you want to get better at with your trading? What's something you notice that you need to practice? I can show you my strategy if you'd like. If you'd like me to show you my strategy, go ahead and put it in the chat. Happy to hear that, Lisa. Let me know what you're curious about. Let me know a point of frustration. Let me know something that you want to improve in your trading. And thank you. So Lisa, you see how I drew this box? I said this is a key support area. There's some people that think that support and resistance acts in this black and white sort of way, where if you crack support, right? You cracked support right here, okay? And that means automatically we just get it moved down like that. But notice that's not happening because it's not that simple. It's not a key level, it's a key area, right? So instead of just drawing a line, I drew this box showing that there's an area. Now what am I saying? Is this some secret knowledge that I have been bestowed upon me from the gods of trading? No. No. Look here. Look to the left. There were buyers here and we went up, right? Look, price came into this area and then bounced up. You see? And then came into this area and bounced up. Okay? So that shows you that there are buyers down here. Okay? So what I want to see is that going to happen again? Right? And so it looks like it's happening again. And often the market moves in twos and threes. So look, you got 1 time, 2 times, 3 times. Okay? So that's like a kind of wedge, basically. 1 push down, 2 pushes down, 3 pushes down. You could also call that a double bottom, right? Because look, you got 2 bottoms, here and here. 1, 2. I would have bought here, but I did not like the entry signal. Okay, so Lisa is saying, let me change the music, Lisa. This is one of the reasons I'm different than every other day trader. I got good music. I'm actually a DJ. I can't do shit without good music. Music's like my religion. Okay, so Lisa said that would be awesome to see your strategy. I'm trying to find a consistent way of looking at it when I'm making support areas and rules. Are you looking at the 5 minute, 15 minute, 2 day, 3 minute? Okay, so I'm very different than a lot of day traders. I do not confuse myself with a million things. And that's like, simplicity is my religion, okay? So two consecutive bull bars. Lisa, this is my strategy. This is the main thing I look for. Or this, or this. Make it easier to see. There you go. TRC means trend continuation. Hopefully that's helpful. If you want me to elaborate on anything, just tell me in the chat. Wanted to get filled here, it wasn't quick enough. Now we're pushing up. So we've been waiting for the bars to come back in. And look, all we had to do was come down to this key support area. This is not rocket science, guys. Look, like I just pointed it out. We came down into this area and then we pushed up. We came down to this area and then we pushed up. And then what happened next time we came into this area? We pushed up. Okay, simple. I try and keep it simple, Lisa. I really try and keep it simple. What's a good platform to use? I like TradingView, and I like TopStep. I have links to both of them in the description. If you use my link, you'll get a discount. This is TradingView. This is what I use. I've tested a lot of different platforms over the years. Fuck. So strong buying. Look at that. Just won 7 points in like nothing, no time. 2 consecutive bull bars with one closing near the high. Lisa, here's some examples of my strategy in action. These are some of my charts. So this is the open. I was marked the high yesterday, as you can see, right? Micro double top, and then I'll get short here on a strong breakout to the downside. That's kind of similar to this, right? Or to this. Lisa, I'm happy to hear you're enjoying the stream. I appreciate you subscribing, and we're in this together, my friend. We're in this together. I promise you I will share everything that I can, all the resources. I've worked my ass off to learn this, and I'm still learning every day, so we'll be learning together, Lisa. Also, I've got a bunch of videos on the channel that are worth checking out. And I would also, Lisa, I would absolutely recommend checking out yesterday's stream from the very beginning to the end. You can put it on like 1.5x or something, but if you watch yesterday's stream, you're gonna see a perfect example of exactly the way I like to trade. And it was a 3.5 hour trade that I kept adding to. So yesterday's stream is a perfect example of, like, I've spent years learning how to do what I did yesterday. So that I recommend checking out yesterday's stream. It's really worth watching. And if you like it, then hang around, because that's the kind of trading I like. So if you don't like it, that's okay too. Everyone has a different way of trading. But as you can see, this trade's working out very immediately, which is awesome. In the past, I would have thought that I missed that trade. But as you can see, I just left my order there. That we like when it's green. We like when this is green. We've been very patient this morning. Good for the bulls. This bar 2025 there, good for the bulls, I guess. That's what we like to see. We get paid to wait. So Lisa, let me break this down for you. These are my 3 setups. Okay. First of all, my strategy is based on a 90% chance of a swing within the first 2 hours with a strong buy or sell signal. So this is an example. Now, let's measure it. This came 2 hours into the day, right? So this is 6:30 a.m. This is almost 8:30 a.m. Okay, so we got a strong buy signal because we got 2 consecutive bull bars, 1 closing on or near its high. Now let me check my setups. 2 consecutive bull bars with 1 closing on or near its high. Okay, so that's the pattern that I look for. This is entering on a breakout. Okay, so we're trying to break out to the upside. So that's my setup, right? Now the stop loss is I put my stop loss 2 ticks below the first leg, the first breakout bar. So that's this one. Okay, and notice my stop is 2 ticks below that, right? Okay, cool. Profit target. Use a measure move. Equal distance of breakout. Measure from the open of the first bar to the close of the second. Okay. Alternative R1. So the breakout is this series of consecutive bars. So this purple thing here is an equidistance move, right? So if we make it orange, a little easier to see, right? So Lisa, as you can see, I measured from here to here, okay? And then we've got an equidistant move from here to here, okay? So that's where my profit target is. And I'm just willing to bet on that getting hit. Will the trade work? I don't know. Looks like it's gonna work, but it might not. That's okay too. My job is to what? My job is to execute my process according to my rules and procedures. That's my job. That's your job as a day trader, is to execute your process according to your rules and procedures. That's it, okay? It's not to try and predict what the market's gonna do. No one can do that. Some people can get it right sometimes, but the job and the way to consistent profits is to execute your process consistently. That's what is very hard to get in your skull. And it's been very hard for me to get that in my skull, but it's something I'm learning. And as you can see, it's something I'm doing well, because look, I just executed my process according to my rules and procedures. I just told you, here's my exact procedures. Look, I did exactly what I'm supposed to do. Trading, you got to do what you're supposed to do, not try and get fancy with it. Yeah, I like the candlesticks. Candlesticks are the easiest. Why? Because it tells you all the information you need. That's why I like the candlesticks. Question from Lisa. How do you come about that 5-minute intervals works for you, not 10 minutes? I got no problem with 10 minutes. I like 10 minutes. But most day traders use 5 minutes. There's, I think, the most volume on the 5-minute, right? But 10 minutes pretty similar. I mean, it's not that different, right? Look at that. Look at that, and then look at that. Pretty much the same, right? So there's really not much difference between the 5-minute and the 10-minute. Great track, huh? Great beats. That's awesome. I love that you're a graphic designer. Maybe you can help me with my thumbnails. You know the YouTube thumbnails? This, I mark my words, this is gonna be the trading channel with the best beats. Best beats of anyone. Mark my words. Lisa, I'm glad you're here. Lisa from Wisconsin. This is Wisconsin, right? I'm so comfortable losing. So okay with losing. It's like the only way to win is to just be totally okay with losing. there were sellers here at support, or resistance rather. EMA acting as resistance, average price, sellers at the average price, showing bearishness, meaning we might be in a bear trend, possibly. But this bar did not close below anything really, and it's a weak sell signal. Barely closed past its midpoint, so I'm not too worried, honestly. Nvidia, Arkel's asking about Nvidia. Yeah, people are talking about Nvidia. People are talking about Nvidia, man. People love Nvidia. Arkel, thank you. Thank you for being here. Tell us where you're streaming in from. And also, which YouTube short did you watch? Also, Arkel, I would recommend watching yesterday's stream. Today's been a little bit slow, but if you go and watch yesterday's stream, it was a perfect example of the way I like to trade, and it was really a masterclass on how to swing trade, over the course of 3 hours. But let me take a look at Nvidia. Bitcoin going sideways. Nvidia. Okay, so yeah, that looks like a good short to me, but you gotta wait for the bar to close. If you're on my channel, you're gonna learn this mantra. Anything goes until the bar close, okay? So let's see if we can practice that here. Arkel. We're looking at what this guy is gonna do, okay? So we gotta wait. 2 minutes and 12 seconds. And if we're holding long, which I am, on the MES here, on the S&P 500 futures, we want a bull close. Arkel looks like a great short, but we gotta wait a minute 19. Okay, Arkel, it depends on how long you're looking to hold. I'm looking at the 5 minute, right? So what's your time frame? You want to hold for a day? You want to hold for an hour? Like, we need more information here in terms of what you're looking at. Now, here, the average price, exponential moving average is acting as support. So we want to see what happens here, right? See if the bears get a strong close. If they do, that's a possible short. I don't know if it's a good short, but it's a possible one. Okay, so weak sell signal, right? So I'd be hesitant to sell there. Maybe wait for another close and see what happens. If you don't like what you see or it's just not clear enough, It's decent, right? Decent sell signal, but not good. That's a 5-minute chart. This is what we want to see. See if we can crack above. I want to see it close above the EMA. I mean, profit target's almost there. 2.5 points away from our target. But the last time we hit the EMA, you can see the bear sold, right? They rejected down. So let's see if we can get it close above the blue line, average price. EMA, exponential moving average. Just realized I'm a little lazy with the way I drew this. Oh, that's a high of yesterday. Okay, so our target's below. So this is how I do my profit targets. I do a measured move, right? This is the measure move tool, it's orange. And then I go 2 ticks before it, and I put my target there. And I'm just confident that that works more often than not. I tested it. I've back tested it over 50 days, and also my mentor tested it over 10,000 hours. So these measure moves work very well. And there's a lot of ways to do profit targets, obviously. A lot. But it's my favorite just because it's simple and I just like it the best. Because you just measure one move and then you go for a target of a equidistant move, which is like a no-brainer, right? You don't want to have to think about a lot of shit when you're trading. Trading's hard enough. So something like a profit target, I say keep it really simple. If you can keep it simple, you can probably do well with trading. Struggling to close above the EMA. But also, the market always goes sideways. The market often goes sideways at the EMA. Wow, look at that. Okay, so that's another one of my setups. Lisa, remember I showed you my setups? So my first setup, these are my setups. Okay, so the first one is 2 consecutive bull bars with one closing on an near tie. That's this guy, right? 2 consecutive bull bars right here. So signal 1, right here. Okay. And then check it out. 2, trend continuation. Bull bar after a bear bar and a bull trend. Bull bar after a bear bar and a bull trend. Right. So I had reason to add on here, and I did. Actually, I had it on a little bit before that. You gotta have your rules mapped out. You gotta have them written out clearly. If you don't, what are you doing? Anything goes until the bar closes. Anything goes. Okay, so Lisa's asking about the slanted red lines. So this I drew in the beginning of the morning. You're talking about these up here, right, Lisa? These are channel lines. So you connect the lower highs, right? First lower high was here. Yeah, okay, good. Second lower high was here, right? So you just connect those and it shows you a channel, right? Bear channel. And then, so that's that line. This line, kind of the same. Just connecting the lower lows. And when you have a channel like that, it's possible that we break below like we did, fail to go lower, and then reverse back up into that channel. So that's a possibility. It's a common outcome. Does that answer your question? Is that helpful? Let's see if the bulls can get a close above the EMA here, which is a blue line. This is super helpful. I wish someone showed me this when I started trading. I had to figure this out all on my own. Just how candlesticks work. Seconds left on the candle. Switch to the 15-minute. At the minimum, we want a close past the midpoint. Man, that is a great close. All right, this is good. This is good for our long position. We're 4 points away. This is our target right here. X marks the spot. Yeah, so one of the most important things in trading is to learn how to draw lines, right? So usually you're just connecting the bottom part or the top part, right? Like it's probably easier to show you on the daily chart, right? Like connect what looks like the most obvious points, right? Could be here, could be here, okay? Something like that. Also notice that the connecting the lows is almost identical to the exponential moving average, this blue line. So you can also just look at the EMA. But it's not as easy to see when there's a big gap up, open, like this, right? The market closed here yesterday, and then we opened here, so that really throws things off. So when that happens, I tend to draw lines. I tend to draw a lot of lines. It just helps me understand what's happening. All right, guys, it looks like we're getting closer to our target. This is awesome. If we make money, I gotta do my money dance. If we make money, I gotta do my money dance. Remember, anything can happen at any moment, and you never expect the market to just do what you think in your mind is gonna happen, because the market has a mind of its own, right? And we're all playing their game. We are playing the game of the market, and the market does what the market does, and no one's smarter than the market. So we just patiently wait. And it either happens or it doesn't. We patiently wait and it happens or it doesn't. The mindset is just so important. Is just like just as important as your technical strategy. Like knowing how to draw lines and stuff like that, really important. But you know what? The mindset's just important, if not even more important. Right? And it's all the whole key to mindset is expectations. Right? All the problems come from having expectations, right? The market should hit my target. We're so close. Oh my God, you start moving your stop loss and getting fearful. This is how you really screw yourself up, is by having expectations. I'm unattached, right? We can win, we can lose. I don't care either way. I mean, obviously I kind of care, right? I'm not trying to lose money, but what I'm trying to do is execute my process according to my rules and procedures. Now, I've showed you I've done that, right? This is what I look for. These are my setups. Okay? So this was the first one. I got long on that one. This was the second one. I added on that one. And all the time you get these little like fake outs. Like the market's always flirting with you. We came a point 1.25 from my target, right? And I'm like, come on. But whatever. Just patiently wait. As long as this closes past its midpoint and closes above this purple line, which is the high of yesterday, I think we'll be all right. Trading is not for the faint of heart. Oh my God. Oh my God, Lisa, it's so difficult. So many sleepless nights. So many sleepless nights. So much of trading is waiting. And anything goes until the bar close. Guys, do me a favor. Put that in the chat. Anything goes until the bar close. If there's one thing you get from the stream, it's this. Anything goes until the bar close. That means we got 1 minute and 18 seconds left. Right? And we're literally 3 ticks from our target. And this is when the brain starts coming in and trying to sabotage your success. The right thing to do right here is just hold for that target. So anything goes until the bar close. Help me out and put it in the chat. If anything, do it for me. $49 seconds on the candle. 42, 41, 40. Anything goes until the bar closed. Thank you, Lisa. Arkle, help me out there. Put it in the chat. Anything goes until the bar closed. 25 seconds. The market's flirting with me. The market's teasing me. It's like a bad lover. Or a good lover, depending on what you're into. We did it, guys. We did it. We did it. Awesome. I said if I won, I gotta do my money dance. If I'm doing money dance, that means I just made money, baby. Come on. We did it. We did it, guys. Execute your strategy according to your rules and procedures. We did that, and it worked. Is it guaranteed to work? Never. Do we expect it? Never. What's our job? Execute. Execute according to our rules and procedures. Here's my rules and procedures. Spelled out. Did exactly what my rules say to do. Was tempted to pull the plug, was tempted, but didn't. Feels good. Let it go. We do the money dance? Okay. We do the money dance. Lisa, you nailed it. I love it. Lisa's been paying attention. Lisa, you're gonna go far in this game. Good for you. That's awesome. Yes. 3 excellent takeaways. I'm happy to see that you were paying attention. And please join us again. I loved having you here. Thank you, everybody, for checking out the stream. It's a great morning. Life is beautiful. Clicking buttons, making money. What's better than that? I love you guys. We'll see you next time.